Okay, let's unpack this. Today, we're taking a deep dive into a company many of you, well, probably interact with almost daily, CPAL.
That's right. And we've got quite a bit to work through here. Financial results, analyst reports, company announcements,
Right.
covering everything from their, core operations to some pretty big strategic moves lately.
And these sources give us a really clear picture, I think, of their journey from, late 2019 right up to the end of May 2025. So quite a span.
Yeah, over 5 years.
Our mission then is to cut through it all, pull out the key insights, understand that performance trajectory, and really figure out the strategic plays they've been making. It's definitely been a bit of a roller coaster, and we're going to unpack it.
Sounds good.
Yeah.
Let's start maybe by setting the scene in those really challenging early years in the pandemic. Remember 2020, 2020?
Oh, yeah. Lockdowns, travel restrictions, curfews. I mean, businesses everywhere faced immense pressure.
Absolutely. And the sources are very clear.
Mhm.
This had a significant impact on CPALL. Their main business, the 7-Elevens, well, they felt it immediately. Revenue saw a noticeable drop.
Yeah, the numbers really show it.
They do.
Yeah.
Revenue is down 4.3% in 2020. Now, to put that in perspective, they'd been seeing like 8-11% annual growth in the years just before that.
So quite a turnaround, a -1 initially.
A sharp contrast,
Yeah.
yeah. And profit took a really significant hit. Reports from Q2 2020 showed profit down nearly 40% year on year.
So 40%. Wow.
And for the full year 2020, profit plunged nearly 28%. It was just a tough environment.
Mm-hmm.
The key metric, same-store sales growth, SSSG, which measures sales at established stores, a real indicator of core health.
Right, how the existing stores are doing.
Exactly. That turned sharply negative. It actually hit a low point of negative 20.2% in Q2 2020.
Minus 20%.
Yeah, because foot traffic was just so heavily restricted. Average sales per store per day also fell naturally.
Wow, that negative SSSG number really underscores the depth of the challenge they faced. So how did they start to navigate this storm, according to the sources? What was the response?
Well, they began focusing on strategies to sort of mitigate the impact. Reports mention initiatives like omnichannel.
Oh, okay, integrating online and offline.
Right,
Yeah.
like letting people order online for store pickup, things like that, and introducing new services within the stores to, keep customers engaged and spending where possible.
And this period also saw some pretty significant corporate moves that looked beyond the immediate crisis, didn't it? Specifically, the acquisition of Lotus's.
That's right. The sources detail the acquisition of Lotus's via CPXT, which many people know better as Macaro.
Right.
That deal was completed in October 2021. So while navigating the pandemic was the, immediate day-to-day focus, this acquisition was a major strategic play. There was lots of discussion around its potential longer-term impact, synergies, all that.
And they were also planting flags internationally during this difficult time. It seems counterintuitive almost.
Exactly.
Yeah.
Despite the domestic headwinds, they didn't stop their international expansion plans. They signed franchise agreements for 7-Eleven in Cambodia in May 2020.
Okay.
And Laos in August 2020.
Yeah.
The first store actually opened in Cambodia in June 2021.
Yeah.
It definitely signaled a commitment to future growth, even when things were, pretty tough at home.
Okay, so that sets the scene for the depths of the pandemic impact. What happened as economies began to reopen and restrictions eased? That must have been a turning point.
It really was. That's when the picture changed dramatically.
Mm-hmm.
As mobility returned and life started to sort of normalize, we saw a significant shift in their performance metrics.
And the numbers show a clear bounce back, right? That crucial SSSG metric started turning positive again in 2022.
Not just positive, it's strongly positive. Reports showed SSSG over 20% in Q3 2022.
Plus 20%, big swing.
Huge swing. And profit performance saw a dramatic improvement. That same Q3 2022, profit was up a massive 146% year on year, showing the speed of the recovery, admittedly from those very low pandemic bases, but still impressive.
A jump like that doesn't happen in a vacuum. What were the main factors powering this recovery, according to the analysis in these reports?
Well, analysts consistently pointed to several key factors. The strong recovery in tourism was a big one,
Makes sense.
directly increasing foot traffic, especially in key tourist areas. Government stimulus measures also played a role.
Like the We Travel Together and Shop Di Mi Kun program.
Exactly, or the Easy e-receipt later. Those definitely helped encourage consumer spending across the board.
Were there internal factors contributing to better profitability too, beyond just, more people coming through the doors?
Yes, definitely. Analysis of the results indicated improved margins. Sources noted this was partly due to a better sales mix, meaning they were selling more higher margin items, like non-food products, relative to lower margin ones.
Got it.
And also some seasonal factors helped. Now, operating expenses like staff costs and advertising did increase as business ramped up. That's normal.
Sure.
But the sales growth and that improved mix helped boost profitability overall. And crucially, the synergies from that earlier CPAXT Lotus's integration also started contributing.
Ah, right. The Akinero deal paying off.
Yeah, expectations in the reports were for significant value creation from these synergies over the next few years. Things like better supply chain efficiency, maybe cross-selling opportunities between the different store formats.
And this recovery phase has culminated in some really strong recent results, right? Taking us right up to early 2025.
Absolutely. The full year 2024 results were impressive. Profit grew by a strong 37%, exceeding 25 billion baht.
Solid growth.
Very solid. And the latest report we have for Q1 2025 shows profit hitting a record high 7.585 billion baht.
A record high. So not just recovering, but actually exceeding pre-pandemic levels in terms of quarterly profit.
Seems so. It shows continued strong growth, up 20% year-on-year for that quarter, reaching new performance highs.
Okay, so that brings us right up to the recent period, specifically May 2025, where we've seen some notable corporate actions detailed in the sources. What's been happening there?
Well, based on the latest company announcements from the stock exchange, the board approved a share buyback program on May 13th, 2025.
A share buyback. Okay.
They stated the purpose was for financial management.
Right, so maybe let's just quickly unpack what a share buyback means for anyone listening who might not be familiar.
Sure. Essentially, it's when a company uses its own cash to buy its shares back from the open market. This reduces the number of shares out there. It can signal management's confidence that the stock might be undervalued, or it can just be a way to return capital directly to shareholders, boosting earnings per share potentially.
Got it. And what are the specifics of this particular program from the reports? The size, budget, time frame?
Okay, so the plan is to buy back up to 150 million shares. That represents about 1.67% of their total paid-up shares.
Okay, not insignificant.
No. The budget allocated is up to 7.5 billion baht. And the program is scheduled to run for 6 months, so from May 16th, 2025 to November 14th, 2025.
And the reports show they actually started implementing this program pretty much immediately in May?
Yes. The daily reports filed with the stock exchange, these were signed by the Chief Financial Officer, Mr. Kringchai Boonpoapachat. They detailed the purchases.
Right.
They started buying shares just a few days after the announcement. While the reports give specific daily numbers, the key takeaway looking across May is that they deployed over 1 billion baht by the end of the month.
1 billion baht already.
Yeah, purchasing 22.6 million shares. That's about 0.25% of the total planned share count, or roughly 14% of the total budget used in just those first couple of weeks.
So actively executing the plan then?
Seems so, yes.
So alongside returning capital through the buyback, were there other financial moves happening? Anything else in the reports?
Yes. The sources also noted plans to offer new bonds in May and June 2025. They even mentioned a specific interest rate of 2.90% for one of the series being offered.
Interesting. So managing debt or raising capital alongside the buyback?
Exactly. It indicates they are also actively managing their debt profile, or perhaps raising capital for general purposes through the bond markets concurrently with the buyback. It's all part of their overall financial strategy.
Yep.
You know.
Now, we probably have to address those persistent rumors that surfaced, particularly around early 2025, about potential major acquisitions. That seemed to cause a stir.
Ah, yes, the market buzz. There was speculation that the wider CP group, not necessarily CPALL directly, but the parent group, might be looking to acquire assets from 7-9 Holdings in Japan.
Specifically referencing their Japan 7-Eleven business, right? That certainly grabbed headlines.
It did, and I recall reports suggesting this market speculation led to some volatility, even some stock price drops for CPALL itself back in early 2025.
Yeah.
That's correct. The market reacted to the possibility of such a, well, potentially huge deal and what the financial implications might be for CPALL, even if indirectly. However, the sources also included the company's response to these rumors.
And what did the company's statements clarify? How did they address it?
Well, they clarified that there was no current action being taken regarding such a significant potential investment. They also sort of reiterated that their investment policy remains focused on business growth and carefully considering opportunities, prudence.
Okay, so basically dampening the speculation.
Exactly. Those statements helped to ease the market concerns that had arisen purely from that speculation. It's actually an interesting example of how rumors, even without immediate action, can impact market sentiment and how a company needs to respond to manage that narrative.
Definitely. So pulling all of this together, the navigating the pandemic, achieving this really strong recovery, making these recent strategic moves like the buyback and the bond issuance, managing debt, and addressing market speculation, what does this whole journey tell us? And importantly, what are analysts saying about the path forward for CPALL based on these sources?
Well, looking at the analyst commentary summarized in the sources, the overall sentiment seems generally positive. They anticipate continued profit growth,
Driven by what mainly?
driven by several factors. Ongoing same-store sales growth, the planned opening of new 7-Eleven branches reports mention a target of around 700 new stores per year.
Still aggressive expansion.
Yep. And the further realization of those synergies from the CPAX-T integration we talked about earlier, that's expected to keep contributing more over time.
Where do analysts see specific areas of strength contributing to this growth? Any particular categories?
They often highlight strong SSSG expected from categories like ready-to-eat food, always a big one for 7-Eleven personal care products, and also the contribution from new products, including those from SMEs, small and medium enterprises, being introduced in stores.
Right, bringing in more variety.
Exactly. And of course, the ongoing contribution from CPAX-T's wholesale and Lotus's retail business is seen as a significant driver for the overall group performance.
And what about that international expansion we mentioned earlier, Cambodia, Laos? How does that fit into the outlook?
The expansion in Cambodia and Laos is consistently viewed by analysts as more of a long-term growth avenue. It's a gradual contributor right now, but important for diversifying their operations geographically over time.
Okay. So looking back at this whole journey we've traced, from the depths of the pandemic impact to these recent strong results and strategic actions, what does this deep dive ultimately mean for you, the listener? What's the big picture takeaway?
Well, I think it clearly shows a major company that demonstrated significant resilience in the face of really unprecedented challenges with the pandemic. They didn't just survive, they implemented strategies during that difficult period and have now returned to a trajectory of pretty robust growth, even hitting record profit levels recently. We've seen them actively managing their financial structure through things like the share buyback and bond issuances, and also, proactively addressing market speculation when it pops up.
So it paints a picture of a dynamic company, wouldn't you say, navigating some complex internal and external factors.
Definitely. It's truly a story of weathering a massive storm and then not just recovering, but actually pushing towards new highs while making these deliberate strategic financial moves.
A period of significant adaptation and strategic execution, it seems.
Absolutely. That sums it up well.
So to leave our listeners with something to think about, given CPAL's recent strong performance and these strategic actions like the share buyback and bond issuance, what aspect of their future growth story, perhaps that international expansion finally taking off, or the impact of ongoing synergies from CPAX-T really kicking in, or maybe how they handle potential future major investment opportunities like those rumors hinted at, what aspect do you think will be the most significant to watch going forward?